3-year lows. We've been talking about these 3-year lows the last 4 or 5 weeks or so as we broke that 18 level. But since yesterday's low point, you can see here that we have seen a little bit of a tick higher. It's not big. It is only a small tick up. But this idea that we're going into what looks like could well be the end of what's been a really good week for some of these indices, not quite so for the European markets. In fact, London has been one of the laggards, despite we saw that really big, thick, heavy upside candle on Wednesday. And further highs yesterday, with us taking us to levels there not seen since the 5th of July. But it really hasn't been the FTSE's most glorious moment, but it has for some of these other indices as we see them push higher. It's been relatively good for the German DAX. In fact, we've seen 5 strong straight days in a row, going from the back end of last week. And today we now have a red candle. It is only a small red candle, so it is only eating in tiny touch into the gains that we've seen. But at the moment, at least, we're looking as though we could well see a couple of points taken off the table as at the start. Same sort of price action on the French markets. This falling line of resistance got 4 touches on that now, starting from the highs that we saw back on the 20th of April, those record highs for the French market. Since then, this is the 4th touch as of yesterday's high point. So a little bit of money again taken out at 73.67 on the French CAC 40. Let's take a look at what's been happening overnight in the Asia Pacific markets. Some of these markets having a pretty good day on the whole. The Australian ASX 200 up, as you can see there, with a rise of just over 0.4%. I want to take a look into more details about why that's happened in just a few moments' time. Nikkei gaining, Hang Seng Stock Index up on the session in today's trade. Wall Street close as of the end of yesterday's session. Gains across the board on the markets in what's been a particularly good week. And in fact, if we look first of all about what's been happening with the Nasdaq, you can see that 1.58% rise. It's really been a tremendous year for tech stocks. This blue box here represents the rise that we've seen since the first trading day of January, I should say, particularly, which was the Monday 2nd. And as of the high point in yesterday's session, this market is up a whopping 41.44%. It really has been a stunning move on the Nasdaq. Not quite at record highs. That was the 16,769 touch that we saw intraday high back in November 2021. So we are still a little bit of a distance away from that. But we're in to territory now where we are looking potentially at getting back up to those record highs at some point. Let's just draw a fib on that just to show you where we are in terms of some of the interesting levels to watch out for. And you can see that we are absolutely bumping up against the 76.4% as of Wednesday's close, I should say. Since then, we've beaten that. So technically, we are now on to a total retracement of this all the way up to those record highs at 16,769. How we get there remains to be seen. But the problem is with this rally that we've seen in tech stocks, it has been relatively narrow. The breadth just hasn't really been there. It's been the really big stocks that's been doing the heavy lifting. It's the Microsofts, it's the Apples, it's the Metas. We've seen some stunning gains this year for some of those stocks as we see things push up. And the Nasdaq really has been the runaway winner in all this. There have been gains for other markets. As we know, the S&P 500 is now not, I won't say packed full of tech stocks, but has an awful lot more tech exposure than it has ever had before. And as of yesterday's high point, we were there at levels there not seen since April 2022. So you can see 14, 15-month highs for some of these other markets. Not so on the Dow, which has been a little bit more difficult to get up there. And indeed, as you can see, yesterday on the 24-hour markets, at least, it was actually a red candle day, despite the fact we saw the markets in the cash session rise and looking as though we could well possibly see a little bit of a loss at the start of today's trade in the US markets for the Dow. Now, after a week rich in macroeconomic data, and it's really all been about what's been happening in the States, things are quietening down today at 10 o'clock this morning. Just wanted to run this one past you. Eurozone trade data out today at 10 o'clock. Deficits expected to narrow to 7.6 billion euros in May after 11.7 billion in April. Meanwhile, in the States, the import and export prices expected at 1:30 p.m. today, then at 3 o'clock this afternoon. Michigan consumer sentiment, which has been in amongst the mix that we've got there. I want to show you what's happening with the dollar, because the dollar really has been the runaway story on the foreign exchange markets this week. You can see this drop that we've got. This is the dollar down against a basket of major currencies, which is made up mostly 60 or 70% of this is euro dollar. As of the low point today, we're striking new lows not seen since April 2022. And this has sent a lot of, well, obviously a lot of currencies up against that weaker dollar. Yesterday, running through the 111.86 level, which are the highs that we saw back in March 2022, pushing higher again today. And we're currently trading at 112.18 for the euro dollar level. So first time past the 112 level that we've seen there since March 2022. Sorry, actually not true. Since, beginning of March 2022, first time past 112 or 112. Sterling as well, getting up a lot of ground as of yesterday's close, there to levels not seen since April 2022. A little bit of money down today. Next week is a big week for UK data. We've got the consumer price data, we've got the producer price data, we've got the retail price data coming through, which will give a little bit more of an insight into how inflation is doing here. And this rise that we've seen for currencies against the US dollar has all about the fact that the US dollar is pulling back on expectations. The Fed's almost done in raising interest rates. Talking about interest rates, in a backlash over rates in Australia, the Australian government decided to reject Philip Lowe's application for a second term as governor of the Reserve Bank of Australia. Instead, they promoted the deputy, Michelle Bullock. Now, this is the first woman to be appointed as RBA governor. And she's expected to implement a swathe of reforms and bring inflation under control. You can see a picture of her here. Michelle Bullock, who will be Reserve Bank of Australia's first female governor, was the leading internal candidate to replace Philip Lowe, who's run the central bank since 2016. It's the first time that Australia has not extended the term of an RBA governor in almost 3 decades. Now, I was talking about the Australian markets as we were talking about what's happening overnight in the Asia-Pacific markets. Look at what's been happening here. The recent rally that we've seen in stocks in Australia, there really hasn't been much of a let-up today. And I would say, on the whole, this move has been greeted with some form of celebration within the Australian benchmark today. Just a quick look at what's been happening with the Australian dollar, down today for a third day in a row against that stronger US dollar at 107.71. So Australia is enjoying its lowest unemployment levels in almost 50 years. The main policy rate's been raised a dozen times, from 0.1% to 4.1% over the past 15 months, and the bank has indicated more increases might be needed. But it'll be interesting to see what first statement Michelle Bullock comes out with to give us some sort of determination as to her leaning in what she wants to do as the new central bank governor in Australia. But certainly in the Australian indices today, it's been greeted with some measure of appreciation. Let's switch the gear on to some of the corporates out today. And I want to begin, first of all, with news that we've seen already this morning from Burberry. Burberry, first quarter sales, actually really been quite a good start to the new fiscal year. First quarter comparable store sales increasing 18%. But look at this Chinese number. Mainland China sales up 46%. Excluding China, we've seen gains of 11% across the Asia-Pacific market. South Asia-Pacific up 39%, Japan up 44%, South Korea up 6%. Really strong recovery, though, in the Chinese markets. Core categories of outerwear and leather goods performing well. Comparable leatherwear sales, heritage rainwear sales up 36%. So people still like those Burberry Macintoshes. Leather goods up 13%. Also, news that it's reopened its flagship store in New Bond Street in London is good for those that like to go physical shopping. The company commencing a further share buyback program with the full £400 million expected to be completed by the end of the full calendar year 2023. I want to show you the Burberry share price chart because it really hasn't reflected anything like that we've seen that recovery in China. Despite the fact China's economy is suffering a little bit, we've got GDP up next week in China, just of interest. You can see here recently we bottomed out at these levels that we've not seen in this market since the low point we had back in December 2022. So these losses we've seen recently have really offset all the early gains we saw in the market at the beginning of 2023. Where do we go from here? It's difficult to know because we've seen 2 days of gains in this market, but nonetheless, I quite like the look of the shape of and feel for this release we've seen today from Burberry. Do we get a rise at 21.17? If you think possibly yes, your stop loss would go below the 21 level with a view to taking it further on up. Now, we had a taster yesterday of US earnings. As I said at the top of the show, the US earnings season has, in theory, kicked off, but in practice, it's really all about today because we've got the big Wall Street banks. Yesterday, it was PepsiCo and Delta Airline. Let's take a look at the three banks concerned because I'll show you this chart here, this list of what's expected. JP Morgan Chase, we're expecting earnings before the bell today of $3.96 on revenues of $39.15 billion. Citigroup, $1.37, revenues of just shy of $20 billion. And Wells Fargo, which is an internally facing bank. It's a bank which doesn't have much international exposure, unlike Citigroup and JP Morgan Chase. Wells Fargo is expecting $1.18 earnings per share on the second quarter figures, revenues of $20.1 billion. I want to show you the JP Morgan share price chart because we've seen that lift up and lift up again recently. And since the lows we had back in October last year, we've seen a rise of almost 50%. And it'll open at $149.92 at 9 o'clock this morning. All sessions on the IG platform after having yesterday risen to levels there that we've not seen in the market since February 2022. I think for me, that's going to be the headline. The follow-up act to that is what's happening with Citigroup. Now, Citigroup, as you can see here, since the highs that we had back there, we've seen these lower highs that we've seen. And I'd want to see, if we see a good number out today, I'd want to see a break of this falling line of resistance. We're opening at 47.87, all sessions at 9 o'clock this morning. That kicks in just below the $49 level. If we get some good numbers out from Citigroup, that'll be the target area to break. If we don't see anything particularly good, then I think it's going to be a little bit more difficult. Technically, we're just above the positive line, if you like, on the MACD down here. That little green box you can see at the bottom there represents a crossover of the blue line over the red dotted line, which gives us momentum on the upside, which technically means we're getting the muscle developing to take us above that line of falling resistance. Just wanted to round off a look at what's been going on with Wells Fargo. As of the intraday trade a couple of days ago, we saw levels there hit not seen since the 9th of March this year. So Wells Fargo recovering from what's been a flatlining sort of period between this time where we are now and last year, which is when we saw those numbers produced last year that we saw the drop down in the market. But these lows that we had back on the 24th of March, since then, this stock is up a fair substantial amount. And looking as though it wants to continue to go in this direction, technically, because of this new higher high here, it's really all about how these earnings come out before the bell today and what happens there. All these three stocks are all sessions on the IG platform. You can take positions and trade them during the point at which these banks come through. It's been an interesting time for these banks, it has to be said, as rates have been rising, which technically speaking is good for banking stocks because they get that interest rate margin increase, which gives them profit. But market conditions for mergers and acquisitions, market conditions for raising capital have been difficult, been hardly any IPOs in the market. And this is really what the bread and butter part of that business is all about. Trading also, volumes have been right down as we've seen volatility down. So it's expected we could well see some pressure building on the trading part of the business as well. So JP Morgan and Citigroup could well be finding they're going a little bit more tough than Wells Fargo, which because of the interest rate margin with individuals taking out loans and wanting to borrow money, that's where some of the really big earnings have been seen for some of these big banks. All out before the bell on the US markets a little bit later on today. Now, the next chart I want to show you is what's happening with oil. And I want to begin, first of all, with Brent, because let's take a look, first of all, at Baker Hughes rig count last week, I should say. Total rig count rising by 6 to 680 last week. Number of oil rigs in operation fell there to 540 from 545 the previous week. But as I said, I want to start off on the charts with what's going on with Brent, because it's been an absolutely stunning run from the lows we had back on the 28th of June. It's been an amazing month of gains on the upside. There's been a little bit of a stoppage on that now at 80.90. Having passed that magical 80 level in the last 24 hours or so, Brent seems now to be putting a little bit of brakes on. The reason why we've seen this rise is because of warnings that companies, these oil companies, as we've been reporting in months ago, are just not putting enough money into new oil pipeline. As economic conditions bite, it certainly seems like the appetite for spending more on environmentally friendly ways of powering our lives, our cars, our planes, our trains. People are instead now going back to what has been, on the whole, a cheaper form of transport, which is funded and driven by fossil fuels. Now, there's a lot of dynamics going on in this market, but broadly speaking, the EIA says there's not enough oil going to be coming onto the market. Therefore, demand, which is expected to continue to uptick on the upside, that demand-supply dynamic is beginning to get a little bit twisted, which is why we've seen this rise here. Just not enough oil coming onto the market. So that's what's happening. We got the Baker Hughes rig count out at 6 o'clock this evening. Just a quick update in a couple of other areas. That that fall we've seen in the dollar has promoted a rise in dollar-denominated assets, such as gold we've got here, which is not too far away now from the top of the week at 1956. That's sidelining the last couple of days, but we've seen a lot of weight added to the price of gold and to the price of copper, which as of today's intraday trade, we've now hit levels there not seen since the 25th of April. A red candle has developed, but that new higher high we've seen today has taken us up to those levels not seen in 3 months. So copper also benefiting from that drop in the price of the dollar. That's it. We're back at 10:30 with Start in the Markets. Hope you can join us there for that. Do watch out for Burberry to start the day's trade. Will it have the legs to go past the previous line of that falling line of resistance I was talking about? It certainly seems like, as a result of today's numbers, Burberry is sitting pretty. That's it. Back at 10:30.